Well, hello everyone. Tay Kim here from the Traders Club, and let's look at the market here. And thank you for tuning in. This is a video that I do on a weekly. Well, every other week we'll do these recorded static video. I will give you guys an update on what I look to call a midweek update, and then every other week what we do is we do live event where you guys can come out and just kind of hang out with me, ask me some questions. Which I would look at things more in depth. I tend to spend more time in these live events, and I just really put those out there as a free event and just as a more of an educational purposes. So if I don't have any important meetings next week, that's what I'm going to do next Wednesday. But today we're going to do this static video here, and we're going to look at the individual equity indices here, and then if we have time, we'll look at Apple, Tesla, Facebook as well. I'm sure many of you have been following me on the blog and on my website, and I've been writing some articles on the indices here. And my last article that we talked about was this level right here. Well, really, it was the Nasdaq that first came out on the 16th. That was right here. So I wrote the article on the 16th. Right here, again, I'm not trying to call bottom, or I'm not trying to tell you that I call things and none of that crap, because that's not what it's all about. What I'm saying is that was a level that I could think that we could potentially bounce. That doesn't mean that it had to, but you can see where we're at that point, and kind of similar level that we've seen here on this is a stochastic. You can see similar level we've seen in that level where we bounce, we get to the oversold status, and then we bounce right at the level. Actually, the article that I wrote, I looked at the MACD instead of stochastic, but I was also looking at other indicators and presuming that this is a good level that we're gonna have a bounce there. And again, just because we're at an oversold status does not mean it has to bounce, but it has a high probability of bouncing when you're in this prolonged primary uptrend. How do you define primary uptrend? Go back in time and you will see what what I mean, where we're at. You can see this is a primary uptrend, and something that I've been harping on, something that I've been just emphatically advocating to you guys for the last, I don't know, maybe a 6 months, year, is that this market isn't going to just roll over without a proper topping pattern, especially when we've been in this kind of an uptrend, right? Topping pattern is really the first signal of a topping pattern is a lower high, right? And where is a lower high? Looking again, I'm talking primary term. I'm not talking the minor term. I'm not talking the intraday data. I don't even look at the intraday data, and you shouldn't either unless you're day trading. That's not what's important. Important is where is tide coming from and where is a tide going. And obviously looking at this Nasdaq here on the QQQ, the tide is moving to the upside. So benefit of Dow continues to go to the buyers in the primary term. And this is something that a lot of times, a lot of people, a lot of traders or investors, they do not look at. And what they do is they kind of let their emotion or what the market should do. And I'm sure you heard this from many different sources, but let me tell you this. Last time what we saw was we had what it looked like a potential topping pattern here, right? This was a 6 months of cultivation, right? What you really need to afraid, if you're gonna afraid bears, you're gonna afraid bears, you need to be afraid of a topping pattern, not so much as something that comes straight down, right? So many times what happens is if this market is actually going to correct, especially in this prolonged uptrend, it's going to form a topping pattern. It's going to form some sort of topping signal, right? And we didn't have that. And this right here is not a pattern. There's no topping pattern here. This would have been more like a topping pattern if bears didn't get greedy. I really think bears got greedy here. And they're probably desperate, and probably they're very impatient, and they're just, very, very greedy at this point. What they did is they should have let bulls play this right here, bounce right here, and then form that right shoulder. Let bulls play a little bit, and then start pushing. So let bears brought it down. Maybe rest a little bit, have bulls play their role here and push back up, and then come back and attack the bulls, and then that way there will be primary term or lower high, and then get this confirmed, and then we get a lower low, and then potentially get back up with the equal lows, lower high. What is that? Head and shoulder formation. It is head and shoulder. See, people always want to argue about, well, it's the head and shoulder. It's not head and shoulders because of this and that and that. We will never get textbook head and shoulders. Head and shoulders is head and shoulders because we stop making higher lows and higher highs. What is the definition of an uptrend? Is higher lows and higher highs. What the head and shoulders insinuating is that it stopped creating higher lows. Instead, we created lower high. And again, that needs to be confirmed. Remember, we had something similar to that. We had equal lows, left shoulder head, and then potential right shoulder. What it didn't do was it came down and created a lower low, thus this actually becoming a lower high. Well, that lower high never became a lower high. Instead, this whole thing just became a higher low, and we thrust higher, right? At this point, what happened was bears got greedy. They kept pushing, and then so what happened was they used up all their energy, used up all their cards, and then once. Because obviously, at some point, they're not gonna, this thing isn't gonna go up like this, and then just one day, or in a few weeks we do that. That's not gonna happen, especially in this prolonged uptrend. Anything can happen. Obviously, this is life. Anything can happen, but probability of that happening is very, very rare. Just like you and I, anything can happen tonight, right? I can die tonight, right? So this market, anything can happen. However, for this thing to just roll over completely, it's not going to happen, especially without a topping pattern, especially when we had something going on from the bears here that has been completely nullified and demolished. Bulls stole that one from them. So bears really agitated at this point, and they're very, very impatient, and they're very, very greedy, and they brought it down. Well, again, without the proper topping pattern, they cannot defeat the bulls because they've been in this prolonged uptrend. Just because we're in this extended level does not mean this market has to roll over, because who knows? God knows how long this thing is going to continue to grind higher, right? So, given that fact, and so what happened was, well, bears never really got patient here, and they were not able to create any kind of topping pattern. As far as the pure price action is concerned, we put a new high here, and this is a kind of a primary term higher low. And you can argue me, Kate, wasn't this a lower low? Yes, that was a lower low in intermediate term, but we've learned that we needed lower. See, lower low itself cannot able to bring this market down because shenanigan like this. We needed lower high, and we didn't get it. The bulls were not, or the bears were not able to cultivate the lower high. And things like this, we've seen these kind of shenanigans happens a lot, where we get below the low, or below the recent lows, we break below that, everybody go crazy, and then we just V-shape higher. And you say, man, again, are we going to continue to have this happening? You can V-shape rally higher, V-shape rally higher, V-shape rally higher, and you ask yourself, this is insane. You know what? You know what we call that? That's what we call an uptrend. So that's what we have to understand, is a primary uptrend is a very, very strong thing. And one thing you have to understand about these things that coming down, straight down, again, you have to cultivate something. We've seen that happening in Dow Jones before, where we gotten below that level. You see, do you remember this? Back in, this was back in, where is that? January, February 2014. Same thing happened here. People start going crazy. We broke them below this. This was a low. We put a new low. Again, we didn't have any kind of topping pattern at that time. Because of that, bulls just rallied higher, just a V-shaped higher. And exact same thing happened here. And you wonder, why is this keep happening? This is insane. This is stupid. Well, really, like I said earlier, this is a definition of an uptrend, right? This is why we look at a big picture. Where are we coming from? Where is the big tide coming from, and where it's going? The big tide is obviously going up. So we've been in this uptrend this long, and do you think one day it's just gonna start sliding like this? No, it's not gonna do that. It needs a proper topping pattern. This is a proper topping pattern. Primary term lower high here. Primary term lower high there, right? That's when we had a this flash crash, and then when we had a 2008 crash. Do we have anything like that on Dow Jones? Do we have anything like that on Spider? No. Where is the lower high? We don't have it. We don't have it. I've been talking about this since all the way up here. Where is the topping pattern or the lower high on the Nasdaq? We just made a new highs. That's what it does. We make new highs, make lows, makes highs. That's an uptrend, primary uptrend, right? And again, only index that potentially had a topping pattern, which everybody was talking about, is the Russell. And something that I've been talking about is this. Well, Russell definitely does look like a topping pattern here, massive one at that. It took about 1 year to cultivate and establish this from the bears. Bears worked so hard for this formation, and I give them props for that. However, the difference is that this topping pattern, and that topping pattern, right? Those are the topping patterns. What's the difference? There's a little mini topping pattern there, the mini correction. What's the difference with these topping patterns? 1, 2, 3. Here, 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 and this one. What's the difference? If anything, this is a much, much stronger topping pattern. That took a year. This probably took about 6, 7, 8 months. Looks like this took about 6 months. That took, you could say this, let's see. Oh, actually, this took about a year. That took about a year. That's a good size. This took about 6 months, 3 months, and that's about a year. So that 1 year cultivation, that's last time in 2007 we had a market crash. But what's the difference today? If you've been watching my videos, if you've been attending my free events, I've been talking about it every single videos, is that we don't have other indices confirming, condoning, endorsing that. When we had a topping pattern here, we also had that topping pattern on Spider, the Nasdaq, and the Dow Jones as well. Here same, but today Russell is on its own. Other indices are not condoning Russell. So Russell really is on its own. So really there isn't a lot of power here for this, for as far as tangible data is concerned. Things can change in the next several months, several weeks, yes. But when we're doing analysis, you always do your analysis, according to the data is at hand. You don't do analysis with the data that you think that it's going to show up, right? So let me say this in a primary term. Primary term, looking at all these indices, I would have to say that benefit Dow continues go to the buyers. Minor term, intermediate term, and primary term. Benefit Dow continues to go to the buyers. You can see how well this uptrend has held. You can see there every time we hit that, and we bounce on the Nasdaq. Looking at a weekly chart as well. Hey, let me go to Spider weekly chart here. You can see we had a hammer candle, very strong follow through, and we talked about this. That, hey, hammer cannot stand alone. If you're doing any candlestick analysis, you understand that any candles, they cannot stand alone. If they got a hammer, what they need is they need a follow through, and you got it here, and then looks like a little bitty candle. Well, so far we only it's Wednesday today, so we got 2 more days of trading, and you could say we might get some pullback or something like that. But it's difficult to say that this market is going to just roll over at this point. And there's some certain insinuation, there's certain signals, and those are just signals. Any signals, right? Any signals that you look at, any possible scenarios that you look at, any overlaying chart, or that it looks like a 1950, or this pattern looks like that, without proper price action to confirm that signal, it's just a signal. Price action is what's most important. You should put most weight on the price action first, and then everything else is a subordinate to that price action. Any kind of signals, right? Any kind of overbought signals, any kind of potential insinuations, all of that is a subordinate to price action, which means you hold on to those potential scenario signals and you wait until the price action confirms that signals. One of the things that I talked about in my blog post was that, hey, is this a final push? And the reason I said that is because, well, we have a very, very similar sentiment going on here, where we had this is a weekly chart, guys, and you can see that in 2007 we had a one big lower wick right there giving us the hammer right on this uptrend, and bulls gave it all to get the new high here, and then finally this mark, that was the top after giving one last push. And we have very similar sentiment of that right here. Right? It's interesting because a lot of things is all kind of lining up here as well. You get this uptrend support, that's where we exactly bounce. Also, that you see that pink line right here, that's the weekly 50 EMA. You can see that that's where we bounce right here, weekly 50 EMA, and that's exactly what bounced weekly 50 EMA. These are just insinuations. There's no confirmation of that. And hey, this thing could just continue higher like this. But what I was talking about is, it's interesting, very, very interesting, but that's it. It's just interesting at this point. But let's say if this thing start doing this, and again, if it does, and what it needs to do is, what did it do? It came down and created equal lows. You go to line chart, you can see it much clearly. That's an equal lows. This is a weekly term. That's the first sign. And then what do you have? A lower high. And then you get that confirmation. That's it. If I see that sign right there, I'll put up with this huge special video. This market, huge warning signal. Potentially, we're getting to a bear market for the next year and a half. I'll make sure that we understand that. But today, no. We still in a high, low, high, high. And you could say, you know what? I will say the same thing. Let's say if this is today. Because your job is not to call market top. And let's say I'm doing analysis, and today is what? October 1st, 2007. I would say the same thing. Benefit Dow continues to go to the buyers because we have higher lows and higher highs. And the next week, and it starts rolling over, haha, you're completely wrong. No. You see, that's what people don't understand, how to truly use technical analysis for their advantage. They just want to call things. That's not how it works. And everybody who does it, they're idiots. They don't know what they're doing. Even if this thing is market time, we'll know about it. If this thing starts coming down and put in an equal low here, and if it does, then I'll be like, okay, all right, there definitely something's cooking here. We got very similar sentiment here, and then it's gonna go up because again, what I talked about, this thing ain't gonna just go straight down without a proper topping pattern, which means a primary term lower high. What is a primary term lower high? Right here. That's a primary term lower high. So we still have to form that. We don't have that. So when we have that, we'll deal with it. But for now, benefit Dow goes to the buyers. Can the sentiment change in the next few days for minor term, intermediate term? Yes. But as far as what the data is at hand, that's what it looks like. But here, let me give you this. As far as insinuation is concerned, yeah, this is a level, and this is a reason why we went in calls on Spider and Nasdaq here. We closed all of our positions up here. The reason being is that because hey, we're at that level, right? We're at that level where this could potentially start to, and I'm not saying it's gonna roll over. It could, but it doesn't have to, because here we moved sideways for about a month or so, maybe 3 weeks, and then rolled over. Here we went up for the next June all the way for 2 months. So 2 months he went higher after hitting the overbought status, right? We're at the overbought status. So are we going to move status for about 2-3 weeks before rolling over? I don't know. Are we going to move, continue grind higher for 2 months? I don't know. Are we going to just roll over, which could be, I don't know. Are we going to form maybe a mini topping pattern a little bit and then have a little bit of correction? I don't know. do you guys understand what I'm saying here? I don't know. Nobody does. You don't have to know, right? But this tells us, hey, we got a pretty good move. We had a V-shaped move there, and this is a probably level where we're gonna start to slow down. That's what he's saying, right? And not only we have it on Spider, we have it on all of them. Nasdaq as well. You can see that we're at that there, and the Dow Jones, same thing. We're at that overbought status right here, right there, right there. You can see how it grinded for a while. They don't just roll over. You know what I mean? You know, even right here, we grinded a little bit for a few weeks and then rolled over. But you see, and that's what I think is gonna happen. That probability was, I don't know exactly what's gonna happen, but I think that's what's gonna happen. This is a level where I think that it's not gonna move any higher. I think we're gonna start to pull back. We're gonna have some volatilities. What I mean by volatilities, it seems like everybody has a different, like, you know what I mean, interpretation of volatility. What I'm saying volatility is the move is not smooth. We get like gap ups, gap downs, and all throughout the day it moves up and down, up and down, up and down. You know, it's not a smooth, bullish move. You know, that's kind of what I mean when I say volatility. I think the volatility is going to start to show up. It means I think it's going to start to like zigzag throughout the day, or we're going to like, you know, it's not going to be a smooth, bullish move, but it's going to be volatile. It's going to be erratic. That's kind of what I mean when I say volatility. Right? So we just looked at daily chart. We just looked at the weekly chart. We looked at the long-term primary term where the tide is moving. As of today, with the data at hand, right? Data is at hand. Do we have any kind of, you know, selling volume or selling candle? No, we don't. So I cannot say that that's what's gonna happen. I think it's gonna be tough to go any higher at this point. I think we're gonna start. We might grind like this. I think it's gonna start to move sideways, and then I think, you know, either we're gonna move sideways for a little bit and then continue higher, or it's gonna roll back. But the biggest question, and I don't know, we'll know about it when we get there, is that when we do roll back, are we coming all the way down to make equal lows? Because remember if that happens, do you remember what I just talked about? Looking at the big picture, the weekly term. If this thing came down all the way through here, and then we do something like that, then it could possibly do that. But do we have any data of that? No. So let's not anticipate that's exactly what's going to happen. Let's give benefit of doubt because the price action is telling us we still at higher lows and higher highs. Do you see that? But once we get the price confirming potential equal lows, then definitely, hey, next few weeks, that's happened. I'll get, okay, that's a sign. Okay, that could be a problem. And then when it goes up and then we create a lower high instead of a higher high, then okay, that's definitely a huge warning signal. We got an equal lows here. We got a lower high. That could possibly be that we're forming a topping pattern. And then if it confirms, that is when we have this warning sign flaring. You know. This is a warning sign. This is a warning sign. This market could potentially have a huge downside. We potentially getting into 1 to 2 years of, you know, I don't know about 1 to 2 years, and you know, it could be maybe a couple months. You know, I have to know about that, but it potentially be will be shifting. We're not in an uptrend anymore. We form a topping pattern. We confirmed, and then this thing could potentially start to roll over. But we don't have all these datas yet. And everybody wants to call stuff because they want to be a hero. And it's very, very difficult because who knows how long it's going to continue higher, right? So, you know, conclusion is this. I do have to give benefit of doubt to the buyers in the minor term, intermediate term, and the primary term for the fact that minor term we're above 10 EMA, intermediate term we're above 50 EMA, primary term obviously we're still in an uptrend. This is a well-established uptrend support line. We still have higher lows and higher highs in the primary term, so benefit of doubt continues to go to the buyers in all three forms: minor, intermediate, and primary. And things could change. Minor term analysis could change next few days if we start to really roll back over something like that. But I'm talking about as of today. But like I told you, I gave you some insinuations on Spider and Dow Jones and Nasdaq and others. And the same with the Russell too, is that we're at that level. We're at that level where things could get hectic for the buyers. And Russell though, it was very good at calling top on the Russell. You see it here, here, we hit that, this thing pretty much like a clockwork, it rolled over. So that will be kind of interesting to see how it's going to play out, you know, next week or two. All right, so you know, next week, next Wednesday, we'll look at it in my live event, and I have planned to do that unless I got something going on that day. So please, if you haven't signed up, sign up for it. If you can't make it, I do have recordings, and you would have to sign up for the. It's a free event to get the recording reminder to you. So let's see here. 25 minutes come by. I think I have some time. I'll go through these rather quickly here. Apple, obviously, hey, higher lows, higher highs. Trend is up. We continue creating. We're still in an uptrend, right? So benefit Dow continues to go to the buyers in the intermediate term, minor term, and primary term. We're above 10 EMA, we're above 50 EMA, we're above 100 SMA. So all the minor, intermediate, primary term benefit Dow continues to go to the buyers. However, just like the Russell and others, then if we look at this, stochastic here, you can see that we're getting to that level. Again, does this mean that it has to roll over? That does not mean that, because last time we got to that level, we continued higher. Here, we got to the level, we continued higher a little bit before pulling back. And this year, things got a bit happy when we got there. So how is it going to play out at this one? I do not know. That's why I use word like benefit of the doubt, because nobody does. Nobody does how it's going to happen. And ideally, if the market pulls back, let's say Nasdaq start pulling back, I do think that this is a level to watch on Apple. Is at this level right here, where we can come back, retest this level as a new support. And this is where 50 MA can get up and kind of hit that and provide support. You can see that 50 MA active support in the past. We came down a little below that, but got back up. And so that's a level to watch. Let's say if that level gets broken and we start feeling this gap, then obviously you want to watch the 100 SMA, because the 100 SMA did act as support right here. So those are the two levels I'd watch, this level and this level, for potential bounce. And if we do bounce and you want to see a sub, maybe do your candlestick analysis, make sure it reclaims 10 EMA to the upside, maybe, looking at some bullish engulfing pattern of some sort, and then potentially you could potentially go long at that point. But so those are some of the levels to watch. Again, I'm not saying that this thing's gonna roll over. I'm saying that if it's gonna happen, this is probably the level. And this is a level that things is not gonna be. I think it's because intermediate term we had a pretty straight up move, and last time we had a pretty straight up move, things got a bit hectic. Does not mean it's gonna just completely roll over. That's insane. Everybody wants to call stuff. We're probably going to, something like that, maybe some volatility, something in that perspective, unless this whole market tanks. But this whole market, again, isn't going to tank without proper topping patterns. So it's safe to say Apple isn't going to just roll over to 70s and 60s, that's not going to happen. But I would have to say that the volatility is going to start to come in. We're going to start to see some selling selling pressure, maybe gap down, gap up, and then kind of a volatility kicks in here, and then potentially come back here to test this level if we roll over here. And next level is probably that 100 SMA coming up, that level here. So those are the level that I watch for that there. And let's go to Tesla here, and let me try to finish this in 30 minutes. And something that I talked about Tesla is that this is a big picture. Is that, let me see here. Let's go to weekly. You can see this, what's happening here. We are making higher lows. This is a weekly term, but then MACD continues to make lower highs there. That's what I like to call clandestine selling pressure or unknown selling pressure. It's kind of a secrecy, right? It's kind of on what is this? We're still in an uptrend, but why struggling right now, right? It's because what it's saying, what the MACD is insinuating, that there is this unknown, clandestine sellers out there slowly, capitalizing, slowly, not capitalizing, capitulation, right? Slowly taking their positions out or selling, That's what's happening. It's unknown pressure. The wind is blowing to the downside. So it's still bullish because we still have higher lows and higher highs. And so bulls are trying and trying and trying, but it's getting very, very hectic. Do you see that? and we got intermediate term lower highs and lower lows. And if this thing start getting below this level, that's gonna be very, very difficult. 200 SMA is the only thing is keeping this thing up. You can see a 200 SMA here and 200 SMA in recent, my last Tesla article. We talked about that 200 SMA. If we lose that 200 SMA, it's going to get hectic. Also, we talked about, this right here that potentially was old support becoming a new resistance there. And also we got downtrend going on. Do you see this? So we got a kind of a multiple. This is a kind of an X. You see that? The old support becoming new resistance and just new established resistance. So then today, just sellers, both buyers was not able to really push higher above that level. We have a declining 50 MA now, and so I would have to say the benefit Dow continues to go to the bears in the minor term and intermediate term. Primary term is a neutral for the fact that we still have higher lows intact with the higher highs. So it's a neutral because we don't have any kind of lower high yet or lower lows yet on the primary term, but with the MACD insinuation on the weekly chart with the weekly bearish divergence, I would have to say that it's gonna be hectic for Tesla buyers, especially if the like I say, if the market if the overall market start to have some volatility, and even if the market starts to decline a little bit this week and next week, Tesla could really hurt. And so we do have this uptrend going right here, and we're just kind of you can see how we caught that as a new resistance, and if this thing loses this support 217-ish, it's probably gonna come back down to about 176, and then downtrend could continue. So I think it's gonna be very, very hectic for Tesla for the next I don't know, until end of 2-3 months maybe. You want to see some healing on this price action, maybe some inverted head and shoulders, some higher lows, and the intermediate time we don't have none of that right now. Lastly, Facebook. Same thing, just like what I talked about in Tesla, we have that exact same thing on Facebook. Here's the thing about it is, again, this is an unknown selling pressure we're seeing here, you see. And you got high lows, but then you can see that pressure is building. There's people slowly, secretly getting out of Facebook and just kind of start taking profit here. And you can see this uptrend. We're barely holding that uptrend. If we lose that uptrend and this horizontal pivot, then probably the next level is about 61, 60-ish, and then 55-ish. So those are the level to watch. And with this pressure continuing, this unknown pressure continuing, clandestine pressure continuing, we could, if you start to see this thing separating like this, you could see this thing pressure continuing. If we see some shakeout in the market, maybe some decline, Facebook could continue to have a struggle there, and which I talked about on my last article there on Facebook, warning you guys about that. And it looks like you want to see this getting nullified. Again, this is a weekly chart, guys. So I don't know how fast it's gonna be. What you want to see is this thing getting back up like this. How long do you think that's gonna take to be healed? Right now they're already kind of pressure is coming this way, and they already had that cross. And last time we had that cross, it was pretty hectic for the buyers, right? We didn't go much lower, but it didn't go anywhere for what, like about a month or so, month and a half. But this time though, we have with the weekly term bearish divergence. Weekly term bearish divergence is a serious matter. It's a serious, especially in this kind of serious matter, because you remember what was Apple's downturn back in 2012. It was this, and this is a very, very strong bearish divergence, very, very potent. The angle of it all, and it wasn't just the bearish divergence in weekly term. We had it on the month, on the daily term. We had it on the island reversal. We had an evening star on the weekly. We had an evening star on the daily and monthly. We had all kinds of topping pattern up here, and that's why this thing just completely had that rolled over there back in 2012 September. And I'm not saying that that's what's going to happen to Facebook. I'm saying that I wouldn't take this lightly. These weekly bearish divergence, especially when we have this kind of a clean divergence. I would have to say though, Apple had much potent bearish divergence than Facebook, but the threat is still there. So definitely this uptrend support is definitely a level to watch. Let me go to daily chart here real quick and see So we got this huge earnings gap there. We're just kind of dangling on that 100 SMA. If we lose that 100 SMA, definitely, it's gonna get hectic here. That level to watch is 1798, and the next level is about 66. That and the 200 SMA level there. So those are the level to watch. And with the weekly bearish divergence continue to pressuring this thing, bulls probably gonna try to get it up, but it's probably gonna be a struggle. It's going to be a struggle for Facebook to really do well. Same with the Tesla, is that if the market, I think the market is going to start to slow down though, but if the market starts to kind of gain that bullish momentum again, and right now is not the time that market is going to, because the market already had a good bullish momentum. It's just the time for the market to settle and kind of rest. And so while market is resting or settling, or potentially bears can kind of decline for the short term, the question is how the Facebook react to that condition, that climate. Same with the Tesla, right? So that, and because they have the weekly bearish divergence, so it could be troubling signs there. But hopefully these videos are helpful to you, and I really wanted to and I really wanted to keep this video short. When I started at this time tonight, man, I'm gonna do it in 10 minutes, 15 minutes, and I don't know, it's just so much to talk about, and I just really appreciate you guys staying through, watching the whole thing. And I know sometimes my free events that I do, I can go up to like hour and a half, and almost 90% of you always stay all the way through. So I appreciate that, and just kind of hearing me out on some of these things. And sometimes it's good to kind of let things out and just kind of share with you guys what I have in mind, and just kind of trying to contribute a little bit in the community. And really though, people who follow my blog, and just appreciate that. And you guys know that I don't tweet every day, every second, because sentiment do not change like that fast. You know what I mean? Sentiment does not change like just quick like that, unless you're again looking at like very short-term trading. But looking at like primary term, long-term pictures, it takes time for anything to establish, anything to form, especially a topping pattern. You've seen Spider, how if we still don't have a topping pattern, it could take up to another 3 to 4 months before getting that topping pattern completed or confirmed. So hope that makes sense to you, and we'll talk next week. Let me know if you have any questions. You can leave any comments on my blog or on the comment section there. So, all right, talk soon.